Terry Ryder's live Q&A. It's your opportunity to throw your questions about real estate, anything you'd like to ask me about residential real estate markets or issues across the country. Please do so. You can do so by typing your questions or comments into the chat box that you should see in front of you. If you'd like to be unmuted and ask your question live, have a brief conversation live through this broadcast, you can do so by clicking the raise your hand item in the chat box. So while we're just waiting for people to come online and type in their questions, I've got a few that were emailed to me a little bit earlier in the last couple of days. One came from Justin, who was asking, just wanted to get your thoughts on purchasing an investment property in the suburb of Kalanga. Thanks for your question, Justin. Kalanga is a suburb in the northern outskirts of Brisbane. It's in the Moreton Bay region local government area, one of the more active markets in the Brisbane metropolitan area. It's a market that we quite often feature in our national top 10 best buys report, including, I think, the current edition, because it's a market which offers a high level of affordability, good infrastructure, proximity to jobs nodes, and good rental yields. Kalanga, Justin, we like, and that general area around Petrie, and Launton, just that general area, because of everything I've just said, but the additional factor, the game changer, is the new university campus. Probably not a pumping thing just at the moment because of the circumstances, but once we get back more towards normal, when university life gets back to normal, that new campus will be pumping, and it's a game changer for that part of northern Brisbane because it's going to generate so much rental demand. Also generate economic activity. It's going to be an employment zone as well as everything else. So those suburbs, Petrie, Launton, Kalanga, all of those suburbs in that precinct, generally medium house prices in the, I don't know, high 300s, low 400,000s, very affordable, good lifestyle features, plenty of green spaces, proximity to jobs nodes, commuter train links, all of that. So I think it's a good place to focus on. If you're looking for somewhere affordable to buy an investment property with prospects for growth and also good rental yields. Okay, just turning to some of the questions that are now coming in. Mark is asking, how's Gladstone performing and what's your view moving forward over the next 2 years? Mark, Gladstone has lately shown increasing signs of improvement. The problem with Gladstone was always that it had a vast oversupply. It should have had the mother of all property booms going back to, say, 2012, 13, 14, because of those huge gas plants that were being built at $60 or $70 billion worth in 3 different projects, all happening at once. But the one thing that can kill a growth property market, it can snuff out all the other factors, is oversupply, and that's what happened. Massive oversupply in Gladstone, and vacancies were above 10% for quite a few years, but now they've consistently come down and down until they got below 3%, and now I can't remember the latest figure, but it's well below 3%, and we've been seeing information coming through in the last several weeks that rents are now rising quite strongly in Gladstone because there's more approaching a shortage. So once you get to the situation where vacancies are low and rents are rising, you can have the conditions for prices to start rising again. And we've actually seen evidence of that. I was checking just a few days ago for another reason, Mark, and a number of the suburbs of Gladstone had recorded growth in their median house prices in the last 12 months. And they've still got some way to go before they get back up to those levels, those peak levels that they formerly had perhaps back in about 2012 or 13. And so it's been a long time in downturn, but it's definitely on the way back now. And the market is generally heading in the right direction. Daniel is asking, with international and interstate migration on a slow or standstill due to COVID-19, has residential development slowed down as well? And how long do you think this will happen? Will it create a scarcity which may or may not push prices up. Yeah, well, there's definitely been a slowdown in construction of new dwellings, Daniel, but that preceded the COVID-19 period. That was already happening. That's one of the reasons why at the start of this year, coming into the pandemic period, we had strongly rising markets in most parts of Australia. Sales activity was up, prices were rising. One of the reasons prices were rising because there were buyers out there, but there was very little supply. The number of new dwellings being created had dropped. There were quite relatively few listings of properties for sale, and vacancies were very low in most locations across Australia. So the COVID-19 period may exacerbate that shortage situation. On the other hand, we are probably going to get tomorrow from the federal government the announcement of a major stimulus package specifically designed to generate construction of new dwellings. It looks like they're going to be offering grants of at least $20,000 to anyone who's going to build a new home. That's the home buyer who causes a new home to be built. So they're trying to generate construction jobs and also increase supply. And with grants as generous as that, there's been some suggestions it could be somewhere between 20,000 and 50,000. We'll get the details hopefully tomorrow. And then we'll know exactly what's proposed, but that's probably going to generate some considerable activity in terms of construction of new dwellings. There have been some stories in mainstream media in the last day or two suggesting that in anticipation of this measure, because it's been forewarned by various forms of media over the last week, because of that, where people have been out in force showing interest in buying land ahead of the announcement so that they actually have a home site ready to go when that announcement is made. So it would appear, based on that anecdotal evidence, that this upcoming stimulus measure by the federal government is going to generate quite a bit of home building, quite a bit of activity in the market. Just one of many things that gives me confidence that real estate is going to continue to pump. We haven't seen any evidence so far of major collapse in property values that some people have predicted. And I think the various stimulus measures are part of the reason why I think real estate is going to hang in pretty well. Ian is saying, in your national top 10 regional hotspots, you talked about areas like Bendigo and Ballarat, areas to look at purchasing in the light of COVID. It's still a good time. Should we wait and see, and why? Look, I think these locations are the type of locations that are going to come out of this COVID period really strongly. Not every part of Australia has been devastated in real estate terms. In fact, I think relatively few have been. The inner city areas of our big cities certainly have been. The Sydney CBD, Melbourne CBD, Brisbane CBD, big rise in vacancies for fairly obvious reasons. But by and large, markets have not been severely impacted. And the ones that have been impacted the least are strong regional centres. Not the ones that are reliant primarily on tourism, like the Gold Coast, but the ones that have well-rounded economies. And they would include Ballarat and Bendigo. Have both been strong markets, particularly Ballarat up to this point. The last 12 months, many of the suburbs of Ballarat have had double-digit growth in their house prices. That's been going on for the last 2 or 3 years. Bendigo is coming into a period of growth as well. But the thing about these markets is firstly that they've got diverse economies. They're not tourism economies as such, although they do get benefit from tourism. But they've got many diverse elements of the economy. They're well set up to do okay in this period and come out of it strongly. But the big factor is that the reason they were growing as strongly as they were in the last couple of years is because guys out of Melbourne, more and more people are working remotely. More and more people are seeking the lifestyle of places like these, getting out of the city where it's much cheaper to buy a home and the cost of living generally is cheaper. This trend is being exacerbated by the shutdown period where people were forced to work from home, and some people are going to try to make it a permanent thing. So we're going to see more demand to regional centres outside the capital cities, but close to the capital cities. And Bendigo and Ballarat, I think, are extremely good examples of that trend. Tim, asking, do you see increased investment from the changes taking place in Hong Kong as people move money out of that jurisdiction? My gut feel, Tim, is that yes, we are going to see people getting their money out and perhaps just getting themselves out of Hong Kong. It appears that what's coming out for Hong Kong is not going to be particularly pretty. That's pretty clear what the intention is, and I think some large numbers of people will be seeking to move to places they see as safe havens like Australia, or at the very least getting their money out and investing in markets like Australia, because we have shown ourselves how in this period just how strong and solid we are as an economy, as in a property market. And today we had the news about the economic growth figures for the March quarter, and the Australian economy contracted 0.4%. So a very minor contraction. It's going to be worse clearly in the June quarter, but what we've seen today is the comparison between the very small fall in GDP in Australia in the March quarter compared to what's happened in other countries like the UK, Germany, the United States, Canada. I think the United States economy contracted 1.5%. Those other places I mentioned, Britain, Canada, Germany, 2% or more. Australia just 0.4%. Again, emphasises just how solid Australia is. It is seen as a safe haven, as an economy, as a place to live, and as a property market. So, Tim, I do think, yes, we're going to see investment coming out of Hong Kong into Australia. Brandon, do you think the government will pass the new stimulus package for home owners and builders? Absolutely, yes. It's very clear that they are. They've already leaked some details. That announcement, I think, is going to be made tomorrow. It's very clear. Josh Frydenberg in his press conference today alluded to it again. I think it's going to be a big announcement tomorrow. The intention is to stimulate construction jobs, the real estate industry, including the creation of affordable housing, which is something that's needed, and we're going to see that tomorrow. So I don't think you're going to have to wait very long, Brandon, to get an answer to that question for sure, but I'm very confident that that's happening and will happen in the next 24 hours. Okay, just having a look at some of the more questions coming in. George, given the new home completions face a significant decline, how much time for volumes to recover in house prices in the short to medium term? Look, we're already seeing a decline in the number of approvals and home completions. Now, we had a couple of years of record building a few years ago, and it's fallen away from them. But I think the package that's going to be announced tomorrow is going to quite potentially strongly reverse that trend. So we really need to wait and see what's in that package and the impact it will have. But I think the indications are it's going to have a very major impact, and we're going to see housing construction rise again. So it kind of, I think that the question may be rendered redundant by what's announced in the next 24 hours. And I think we've touched on that. Katie, there's a question.
Oh, someone just had their hand up. They put it down again.
Oh, okay. Well, when someone puts their hand up and keeps it up, let me know. A question that's come via Facebook, I think, is it a good time to buy investment property in Sydney? Look, I think it is, but not just everywhere in Sydney. Sydney is a very big place, and you need to be choosy about where you buy. I think the place right now, in times like this, I think you need to follow the infrastructure trail, and I think Western Sydney is the place to be. If you're thinking of buying an investment property and you'd like it to be in Sydney, some people are Sydney-based and want to invest somewhere close to home. It's not necessarily, in my view, a sound strategy, but if that's your thinking, then I'd be thinking the Western Sydney economy. the infrastructure that's going to be happening there is already underway. The new airport and all the infrastructure like road and rail that's going to happen around it, the jobs nodes that will spring up around it, the demand for real estate out in places like the local government areas of Blacktown, Liverpool, Penrith, perhaps also Campbelltown and Camden. That's within striking distance of that major event. There's lots of other stuff happening out there as well. There's like $1 billion plan to revitalise the CBD of Mount Druitt, as just as one example. So that's where I'd be focusing for investment in Sydney right now in the current climate. And things will change as we move forward and get out of this pandemic period. And other parts of Sydney will have bright prospects as well. But right now, I'd be thinking where the infrastructure is going out in Western Sydney.
Sandeep has his hand raised. Sandeep, I'll unmute you and you can ask Terry your question live.
Okay, has that happened, Katie?
Can you hear me?
Hi, Sandeep, I can hear you.
Oh, great. Thank you, Terry. Thank you for taking this question of mine. I've sent you a question separately as well, and that was one of them. And the second most important was about the SMSF. Do you see SMSF, those who have opened up in the last 2, 3, 4 years, will be able to survive? What is the statistics on them? And at the same time, how is the industry going to look towards SMSF, because there are all the major lenders have gone out of SMSF. The interest rates currently being offered by handful of them are in the range of 6% plus, or maybe 5.5% plus. Do you still see that there would be people looking to invest and buy residential or commercial from SMSF? Thank you, Terry.
Yeah, Sandeep, I think so, but you're right about the lending situation. It doesn't mean it's completely dead, because there are lenders who are still willing to lend to self-managed super funds. They're not any of the big name ones. Many of them are lenders you probably haven't heard of, but they do exist. But they are relatively few and far between, and the interest rates are higher. Really, there needs to be some changes at a government level to this whole game. The way it's been set up, it makes it very hard for people to get finance on reasonable terms, as you've pointed out. It's a shame, because it's a great, potentially a great vehicle. I certainly use a self-managed super fund, and will continue to do so. But I think it needs to be rethought at a government level, because some of the restrictions they've placed on it just make it very, very hard for people to operate with them. Beyond that, Sandeep, it's not really my area of expertise. It's really perhaps a question more that should be directed to an accountant who's got some specialty in real estate, and there's plenty of those around. But yeah, beyond that, I'm not sure that I can give you too many more expert comments. Any other questions you have?
Is in the space of SMSF again? You said there are possibly some lenders which are La Trobe, Liberty, our Think Tank, Better Choice, etc., etc. So it makes very hard for people to basically make any income out of those investments if they are borrowing from them, and those lenders are quite rigid in how they do. So is the real estate industry trying to lobby the government to look at that aspect, or is it completely put on a back burner and left it as it is?
I think it's the latter, really. It's pretty much on the back burner. It's not a major topic for the real estate industry at the moment. I guess right now everyone's got bigger things to think about, but is this something that you're personally sort of grappling with yourself, Sandeep? You've got a self-managed super fund and you're looking for better options on how to borrow.
Uh-huh.
Yeah, I think it would be good to talk to a good mortgage broker about that. We have Louise Lucas from the Property Education Company on our panel of partners. She's a good person to talk to about that, about the lending options, generally speaking, but also for self-managed super funds. So if you perhaps just drop me a quick email.
I will.
Just ryder@hotspotting.com.au. I can send you her details, and you can make contact with her and ask your questions. She'd be much better able to answer them than me, because it's not really my area of specialty.
Great. Thank you, Terry. And there was one more question which I have sent via the panel. If you can throw some light on that, please.
Well, while you're live, you might as well give it to me right now.
Oh, yeah. Sure. So I was mentioning about North Ipswich area, the Riverlink Shopping Centre. I have approximately got 3 blocks there. One is totaling, or there are 3 houses, 3 blocks and 3 houses. One is totaling around 1,200 square meters, 1,100 square meters, and they're all zoned for CBD high residential and mixed use. So 3-story of commercial office and then 7-story residential. I've been holding them for a little while. The question was, do you see potential for them to be held on to, or is it a good idea to basically get out of it in the next 1 or 2 years, or hold it long term?
So you're talking the Ipswich area. Which suburbs are they in?
They are in particular CBD, North Ipswich. It is next to the Riverlink Shopping Centre.
In the CBD?
In the CBD, yeah. North Ipswich CBD, yes.
North Ipswich.
Yeah.
Yeah.
The Riverlink Shopping Centre, which is the biggest shopping centre in the Ipswich area, just next to it, right bang next to it, 200, 300 meters from there.
Yeah, okay. Look, I generally think that real estate in Ipswich City generally is something that's worth hanging on to. It's a city that's got a big future. It's very affordable, attracts buyers and investor buyers and home buyers for that reason. It's also got a lot of major jobs, and that's increasing, and that will continue to increase with the evolution of master plan communities like at Ripley and the longer term one at Springfield. There's also the RAF base not far from the area that you're talking about. So there's, economically, it's a very strong area to be in, and I think taking a long-term view, I'd be holding on to it.
Great. Thank you very much, Terry.
Thanks, Andy, for your questions, and thanks for coming on live.
Thank you.
And that's just
one more person with their hand up. Michael is wanting to talk at the moment.
Okay. Michael, how are you?
You there, Terry?
Yes, I am. Michael, how are you going?
Good, yourself?
Not too bad. Not too bad. All things considered, we're still here.
What's your take on the Townsville market and the unit market in Brisbane?
Townsville, I think, is a city that's reasonably well set up to withstand the current forces of the pandemic, more so than, say, Cairns, which is more tourism orientated. And I think it's going to come out of this period quite strongly. It was moving into a recovery phase. It's been in downturn for a few years for various reasons, like the Clive Palmer debacle, for example. Nickel refinery. Sorry, that was Sandy cutting across us again. Yes, Michael, I think I like the Townsville economy. It's very diversified. It's got big elements of military, government, manufacturing. Tourism is a factor, but it's not so heavily dependent on tourism as some other parts of the regional Queensland scene, like the Gold Coast and Cairns. It was, I think, coming back quite well before we came into this pandemic period, and it's due for a period of growth. There's a lot of infrastructure spending either underway or in planning for Townsville, and that's the factor that we like most about it. We see happening in Townsville what has happened on the Sunshine Coast. The Sunshine Coast has become a very strong economy, a much broader and stronger economy through infrastructure spending, over $20 billion worth, and there's even more targeted on Townsville. If even half of it happens, or even a third of it happens, it's going to be huge for the Townsville economy and for the property market. So I think after several tough years, I think the future is much brighter for Townsville going forward.
So I've got a unit there. So the next 5 years, you'd be happy to hold 5, 6 years?
Yeah, I think so. I think so. You know, it would be a shame to sell at a time where it looks like Townsville is going to come into a better period. And I know we had those floods about just over 12 months ago, which didn't help matters either. But Townsville has got beyond that and is now ready to move forward, I think. So if you own real estate, you know, I think hold on to it and give it some more time, because I think Townsville has a very strong future, particularly when we get more of that infrastructure spending happening. Some of it's already happened, like the new stadium, but there's more to come, a lot more to come.
And what's your take on the unit market in Brisbane, Terry?
Well, I guess it depends where it's perhaps, you know, up until the onset of the pandemic, it had got to the point where the market had absorbed most of the previous oversupply, because it was undoubtedly a surplus there for a number of years that increased vacancy rates and prevented rents and prices from growing. We just got to the point, I think, coming into this year where much of that had been absorbed and the market could start to go forward. But the pandemic has caused vacancies to balloon out again, only through people who owned investment properties and were using Airbnb and those sorts of platforms rather than permanent tenants. And now they're seeking permanent tenants because tourism has been nobbled by the situation, and that's meant that, you know, the vacancy rate in the Brisbane CBD and the near city suburbs is blown out again. So that doesn't help, but hopefully that's a short-term thing. We're now this week getting back to a situation where people can travel more widely, will help the tourism industry in Queensland. The borders are still closed, unfortunately, and international travel obviously not possible. Until we get back totally to normal, I think the inner city Brisbane unit market's going to be just a little bit restrained, but longer term, it's got a better future.
Yeah, I have one unit in Everton Park and one in Wollongabba specifically.
Yeah, I think Wollongabba's got some exciting things in prospect, mainly to do with the Cross River Rail. There's going to be a lot of infrastructure development and property development around the stations, and that Wollongabba is one of them. Everton Park is part of that sort of inner northern suburbs, which I think is one of the, just lately, coming into the pandemic period, that was probably the strongest part of the Brisbane market, that sort of north side, inner middle ring suburbs, of which Everton Park is part, I think, looking pretty good. So, you know, you've got to take a long-term view and think, okay, we're in a very unusual period, but once we get out of it and beyond it, and we get back to what used to be considered normal, then markets like that can do quite well.
It's also undergoing a bit of gentrification, Terry, too, isn't it? Everton Park?
Yeah, that general area is, and it's well served by infrastructure, particularly transport links. So I think it's the sort of suburb that we like. It's a part of the Brisbane market that we like. We have a particular report on that, what we call the inner north side. And for various reasons, including infrastructure spending, transport links, the quality of dwellings relative to their price, proximity to desirable things, major jobs nodes, not just the CBD, but you know, for example, the Australian Trade Coast precinct that surrounds the Port of Brisbane and the Brisbane Airport, the biggest jobs nodes in the city. All of that is good for Brisbane North Side property.
So you'd be happy to hold for the next 5, 6 years, both them?
Yeah, I think so. I think always take a long-term view of property, but in those locations, Townsville and Everton Park, I think certainly it would be, without knowing much about the individual properties, but the location-wise, I'd say yes, hold on to them.
Okay, thanks very much.
You're welcome, Michael. Thanks for coming on the program.
There are a couple more people with their hands up. Terry, would you like to take one more or go to some of the question and answer questions?
I'll just go to some of the Q&A and chat box questions. They've been building up, and then we can go back to some of those who have their hand up. We've dealt with that. Daniel was asking about the main indexes one should look for in infrastructure spending before looking deeper at investing in a regional town. Do you have a minimum population size for a regional town? Yeah, pretty good question, Daniel. You can't be too prescriptive about things like this because there's always horses for courses, but generally I tend to think in terms of, say, 20 or 30,000 as a minimum. There are plenty of hill change towns, for example, regional Victoria, which are much smaller than that and have done really well, shown really good price growth. So you can't be too hard and fast with that. You've perhaps got to look in terms of the broader area and the broader trends. But if you're looking for safety and solidity, I think I would prefer to be, if we're talking regional Victoria, prefer to be in a Ballarat or a Geelong or Bendigo than in one of the smaller hill change towns as an investment, even though some of those smaller places have shown really good growth. There's just more of a long-term future. There's more economic solidity there, and there's also a lot more infrastructure spending directed there. I'm not sure what you mean by what are the main indexes to look for. I think you generally just need to do your research. Our reports, like our top 5 regional Victorian hotspots, for example, which includes locations like Bendigo and Ballarat and others, we outline all the major infrastructure that's there and what's happening now and what's proposed to be happening. That's very much a very important word. It's probably the single most important word for us in determining whether we think an area is worth investing in or not. First, the existing infrastructure, and then looking what is proposed. And in the case of, say Bendigo, $700 million spent recently on a new hospital there. Major employers, the headquarters of Bendigo and Adelaide Bank, all of those sorts of solid things are very important to look for. I think also of a place like Orange in New South Wales, where when you look through everything that's there already and it's coming up, like the expansion of the medical facilities, expansion of the Cardia gold mine, which is a big employer, and they're spending big money on another expansion there. Those are the kind of things we look for because those things strengthen and broaden the economy and create jobs, and that flows through to the real estate market. Some of those places also are getting that factor I referred to earlier, where more and more people are going to be looking to live and work remotely. And it's been exacerbated by the shutdown phase, which has forced people to work at home, and some people will make it permanent if they can, but that trend was already underway. And so places that we've been discussing, and Orange in New South Wales is another one, the Central Coast, Newcastle, Wollongong, they're all places that I think benefit from that trend. But they're also places where the infrastructure is strong and there's more spending happening coming up. Imran is asking my view on the Redcliffe Peninsula, such as the suburbs of Margate and Redcliffe itself. As it has a high occupier of renters, not very high household income. Do you think that's a good investment area? Close to beaches, not far from the new university. Yes, Imran, I do. The Redcliffe Peninsula became more viable for investors when the new rail link opened a couple of years ago. There's also been a lot of gentrification going through the peninsula. There's been quite a significant uplift in the lifestyle there, raising of standard in the general lifestyle and the general amenities and infrastructure there. And the new university, which is just down a few stops down the new train line, just adds an extra element. So you've got an affordable bayside lifestyle with relatively new rail links, proximity to a major new university campus. So yeah, I think it's a good place to think about to buy affordably as an investor. It's well worth consideration, I think. Mark asking, if you were to invest with the main aim of growth, that's capital growth, which suburbs, locations would be your top 3? Yeah, it's a little bit hard to single out 3 off the top of my head. We have a national top 10 best buys reports, and thinking of the locations that feature prominently in that. I've already mentioned Bendigo as a place that that we like a lot for various reasons. Affordable, good rental yields, a growth city, benefiting on some of those trends I've already mentioned. Well set up to do well out of the pandemic period moving forward. Some of the locations in Adelaide, very much an underrated city. It's just South Australian Adelaide has handled the pandemic period health-wise better than anywhere else. It's releasing restrictions sooner and faster because of that. It's also got an economy that's well set up to withstand the economic forces of the pandemic and to go forward strongly, particularly because it's so strong in technology, high-tech innovation. I think it's going to be a happening place for people to own real estate. It's very affordable, great value for money, and within it I would suggest something like the Marion local government area, which has got a major university campus, a major medical precinct, and the Tonsley Innovation Precinct, as well as good transport connections, affordable real estate. So that would be one that I would seriously consider. Mark, where else? I'm very much thinking regional at the moment. I think regional areas should be much more prominent on the thinking of property investors at any time, but particularly these times. Regional areas, not all of them, but most of them have been less impacted by the pandemic situation than the big cities. They're more affordable, they've got better rental yields. I think we're going to see a lot of demand, particularly in those lifestyle places close to the big cities. So I'm thinking, we've mentioned Ballarat and Bendigo, but Orange is one that I particularly like at the moment, not far from Sydney, for all sorts of reasons. Newcastle on the Central Coast, I think also will do well. The Sunshine Coast in Queensland, it's just, I think, one of the most compelling economic growth stories anywhere in Australia, and I just think it's real estate market that's going to go from strength to strength, taking a long-term view. So that would also be a contender for my top 3. Paul, keen to hear your view on the Wollongong market and surrounding areas. Yeah, well, Wollongong, Paul, certainly fits the general theme that we've discussed a number of times in the past 30 minutes or so, and that's that trend of people increasingly looking to perhaps get out of the city and have a more affordable and more relaxed lifestyle in good places, still within striking distance of the big city. And we've touched on a number of examples. I think Wollongong's another great example of that. It's a very strong city in its own right. It's transitioned successfully from the old economy to the new. It used to be very much a blue-collar manufacturing type economy, and that kind of economy was struggling, but it's transitioned into a space where it's now, it's got a lot of employment in health and education and technology type industries, and so it's made that transition successfully. It's a great lifestyle, well connected to Sydney. I think it's got a very, very big future, and I think it's going to go from strength to strength. As we head out of this period, it's going to be one of those places I think that's going to thrive. Okay. Brandon's asking, do you think the new housing construction stimulus will catalyse an oversupply of new homes? in the house land package areas, make it difficult for them to be rented out. Look, until we see the detail, Brandon, and the reaction of the market, it's a little bit hard to know, but there's always a possibility that developers and builders will get carried away and create short-term oversupply. We've seen it in the past, but generally it is short-term. I really don't expect that. I think it's just going to be a counteraction to the negative forces that we've seen happening because of the pandemic and the economic shutdown. And this is going to be something that's going to counteract it and get things kick-started again. I think it's really important. It's going to generate economic activity. It's going to create jobs. And there's also a need for affordable housing in various parts of Australia. The other thing I'd say about it is, in direct answer to your point about whether it might create oversupply, I really don't think so as a generalised comment, because we came into this period with a shortage in many parts of Australia, very low vacancies, very low listings of properties for sale, and the amount of construction of dwellings was, in the last, say, 2 years, has been less than we need to be building to cater for growth. I know population growth is going to take a short-term hit because of the constraints on people coming in from overseas, but it is a short-term one. And I really don't think this stimulus is going to create oversupply. It's going to actually allow us to catch up, take up some of the slack that's been created. Anonymous attendee saying, not sure if this has been asked, with the Treasurer saying that this quarter seems to be a recession phase, do you reckon it will impact property prices? I don't think so. What the Treasurer is saying today is that the March quarter GDP reduced, not much, but it did reduce, and it's going to be worse in the current quarter, the June quarter. And the definition of a recession is 2 consecutive quarters of negative growth, which is a pretty strange term. When GDP drops 2 quarters in a row, it's deemed technically to be a recession. And so what he's saying is we're already in it, because it's certain that the June quarter is going to be another even bigger drop. But I don't think it's going to create any major impact on property prices. If it was going to, we would have seen it by now. We've been in this thing for more than 3 months. The first share market meltdown was 20th of February. And around about then, people started the doomsday forecasters started suggesting that property prices would collapse. 3 months later, they haven't. As I mentioned at the start of the broadcast, the figures out this week from SQM Research actually record in May another increase in house prices nationally. Slightly different result from the one from CoreLogic the other day, which said a slight contraction nationally on house prices. Either way, it's a very muted impact. We've had 3 months, March, April, and May, which have shown no major impact on property prices. And I think one of the reasons, there's a lot of reasons why I don't think property prices will show any dramatic decline, but the government stimulus is going to be one of those reasons. It already is. It's helping keep people of JobKeeper and JobSeeker, and also the other stimulus measures that relate to reducing the amount of tax that businesses have to pay. All of that's having an impact. The mortgage holidays offered by the banks is another factor. So while we don't have as many buyers out there at the moment, there's also not many sellers listing for sale. Listings have dropped a lot, and there's a balancing between the two that's keeping prices fairly solid. And I think that's going to continue to be the case. I think we've seen in the past, the last time we had a recession and unemployment was as high as 10 or 11%, that's the early 90s. Real estate prices didn't drop very much, and in the next 12 months they actually rose. We saw the same thing, GFC 2008, there was a minor contraction on property prices in 2008, but in 2009 they rose 13.6%, I think is the figure from the Australian Bureau of Statistics, and they rose again in 2010. So I think we're going to see a similar scenario this time. Roe, could I please have your thoughts on the Sunshine Coast, specifically Coolum Beach, in reference to residential property? I did touch on the Sunshine Coast a little bit earlier, but happy to talk about it again. Sunshine Coast is a wonderful story, I think, economically. It's through infrastructure spending and proactive action by the Sunshine Coast Regional Council. It's been transformed from being a kind of a sleepy tourist town into a serious regional city. In fact, you could argue that it's on the cusp of becoming an international city. Its airport will be international very soon. It's got a world-class medical precinct now. There's a subsea cable coming in, the fastest internet links from Asia to anywhere on the east coast of Australia. A new CBD is going to be built, and the first buildings are under construction. There's so much happening. It's made for a very strong economy. Talking to people at the coalface of the property market there in recent weeks and months, there's no evidence of any decline in values. Demand is still pretty strong there. So I think it's got a great future, generally speaking. And Coolum Beach, yeah, great location, wonderful lifestyle. I love that sweeping vista looking up from Coolum Beach up north towards Noosa. Fantastic stretch of coastline, and very affordable, sort of like a village in its own right within the Sunshine Coast local government area. And I think it's certainly a great place to live, and it'll be a good place to own real estate, I think, with a big future. So, Katie, we've got 3 people with their hands raised. Perhaps we could go to one of those now by starting to build up a bit of a queue.
All right. Ganesh, I'm going to unmute you now.
Hello.
Hello.
Hi. This is about a property we bought in Sydney in the Upper North Shore area. 3 years before, I think, in Hornsby. So is it right time to sell the property to buy a new one? It's the one that we bought is an old one. So is it right time for selling and then buying a new property? And the other thing is, like, if we are buying, like, which suburbs in Sydney would be the best choice for going?
So you're talking about buying for investment?
Yeah.
Okay. So you have an investment property, you're thinking of selling it and then buying another investment property?
Yeah. Yeah.
Okay. That situation, I would be more, if it's possible, I don't think it's a good strategy generally to sort of sell and buy and sell and buy. I think the best strategy for accumulation of wealth through property investment is to develop a portfolio and grow the portfolio. In other words, accumulate. So hold on to what you have and seek to invest in a new property rather than sell one and buy another, because when you pursue that strategy, you lose so much in the costs of selling and the costs of buying. So I think if it's possible, hold on to the property you have. And it is a good time, I think, to be looking to buy in Sydney because of the state of the market right now. And there will be opportunities to buy property at good prices because of the circumstances, although prices generally are holding up pretty well, but there'll be individual circumstances where you can buy well. As I mentioned earlier in the broadcast, I'd be looking to focus perhaps in Western Sydney, where there's just going to be such a concentration of major investment, particularly now. In any circumstances, that would be where I'd be thinking because of the second airport and the new road and rail links that will come around as a result of that. But it's going to be fast-tracked. That's basically one of the approaches of both state and federal governments at the moment, is wherever possible to fast-track the development of infrastructure that was already planned to be built, is already well advanced in the planning to stimulate the economy to create jobs and get things growing again. So, and there's going to be a lot of that concentrated in the western part of Sydney, in the local government areas of that will be impacted would be Liverpool, Penrith and Blacktown. So that's where I'd be perhaps focusing. It's also the more affordable parts of the Sydney market, which is obviously a very expensive market, but relatively it's the most affordable part. And but it's where I think we're going to be seeing growth stimulated by infrastructure spending.
Thank you. Thanks
Okay, Ganesh, thanks
for the insight. Yeah, thank you.
Thanks for coming on the program, Ganesh.
Would you like another live question?
Yes, well, we could take one more and then go back to some of the questions that have been typed in.
All right, Matt Babu has had his hand up patiently. So Matt, I'm just about to unmute you. I'm trying to unmute you, Matt. Hang on. Sorry, Matt, I'm having trouble unmuting you. We might go to Glenn and see if I can unmute him. Hang on, Glenn. I'll unmute you now. Sorry, guys, the unmute button is not working. You want to take another live question, go back to your Q&A, Terry.
Okay. Thanks, Katie. We've got a question about the market in Butler, Western Australia.
On, actually, Glenn, I think you're, no, Glenn was, and now he's.
Can anyone hear me? Katie? Terry?
Yes. Hi, Glenn. Yes,
oh, great.
At last, the technology has worked. How's it going, Glenn?
Yeah, really good. Thank you for your time tonight and all that. I've got my wife with me as well. I've been listening the last month for with the webinars and appreciate them. The thing I'm worrying about, is Perth, and I did bring it up when you at your last. I'm just wondering, is it a real boom bust, economy there? And the other place we're considering is Adelaide, and I know you love that a lot. But is Perth bottomed out at the minute?
Yeah, well, every time we think so, something happens, and it sort of stays stalled. Unfortunately, beginning of last year, we thought that Perth at bottom was on the way back, and then of course we had the federal election, which put a brake on everything. Then later part of last year, early part of this year, it was definitely moving into a recovery phase, and of course the pandemic has come along. I actually think that one of the economies that's going to emerge strongly from this will be Western Australia, and it's mainly because I think we're going to have another resources boom out of this. Partly it depends on our relationship with China, which is a little bit dicey at the moment, but as economies like China fight back and seek to regenerate their economy, they're going to be needing, iron ore and other resources from Australia, and I think Western Australia is going to benefit from that, and that flows through to the Perth property market, which has been trying to recover for the past 12 or 18 months, and major events, as I said, keep popping up to get in the way. But after several years of decline, the value for money is pretty good. We had got to a situation where vacancies were now down to quite low levels, whereas previously they were 4 or 5% or more. But now, well down below 3%, rents were starting to rise again. So I think once we start the economic fight back from this period, Glenn, I think that the Perth market is going to at last show some growth. So do you have any follow-up questions about that?
what was appealing to me, and I looked at some of those areas like Wanneroo and Joondalup, and what I did like about them, that, you know, there's 800 square metre blocks. There's a lot of, you know, houses in the 90s there, but it looks like, you know, you get a lot of bang for buck there, and certainly even the asking prices are actually cheaper than what SQM data is actually putting up as well. So I've just wondered if there's potential there, but I suppose it's just, it sounds like to me, though, you're answering my question, that Adelaide might be safer. But when I do look at Marion, for example, although it sounds wonderful, there's not a lot on the market there at the minute, according to real estate, you know, there's a lot of older places that need doing up. There's already a lot of subdivision going on there, and I'm just wondering whether some of those places, you know, I might have missed the boat on. That's all.
Yeah, I understand the difficulty in trying to get your hands on a property in Marion. I had the same problem myself. Trying there, it's quite a competitive market. Adelaide, you know, and through this pandemic period, has continued to be a very competitive market. I know buyers agents who operate in that space saying it doesn't feel any different to normal during the shutdown period in Adelaide. It's a very solid and underrated market. And I did try for quite some time to secure a property myself in the Marion local government area of Adelaide, and didn't really succeed because it was very competitive, and good properties that came up didn't stay on the market for very long. But it's probably worth persisting if you're a patient person, because I think it's just a great part of the Adelaide market to be in, because of the everything that surrounds it, the university campus, the medical precinct, the Tonsley precinct, the transport infrastructure and all of that, and it's very affordable, you know, relative to the bigger cities. There are other parts of Adelaide that are good as well. You mentioned Joondalup and Perth. I really do like that part of Perth. It's quite affordable, wonderful infrastructure in the Joondalup town centre, and as you pointed out, you can buy properties in that precinct. You've got to make sure you check on the council website, make sure you get the right zoning and land size, but certain size with the right zoning, you can build a second dwelling or subdivide, and that's something to look for. Again, those properties are very popular with investors, so can be quite competitive. But I guess that's the case with you know, things that are worth having. There will be competing investors. A couple of other possibilities that you might want to consider. I have touched on Bendigo. That's a place where you can buy. I know I've done it myself, where you can buy properties at, you know, in the 300,000s, and because of the size of the land, you can subdivide into 2 blocks or even 3. Another place that's very good for that, and a place that's weathering the storm of the pandemic better than most, is Albury-Wodonga, at the border of New South Wales and Victoria. Very affordable, great rental yields, and lots of properties where the land size and the zoning means you can build a second dwelling and do that value adding. And its economy, the 5 biggest employment sectors in Albury-Wodonga are all sectors where they're more likely to be hiring than firing in this period. So it's well set up to do well coming out of this.
Look, just the final thing out of everything you said, if you had to pick one of those, what is the one place you love? At the sorry.
Yeah. You know, honestly, there's no one right answer to that, because it depends on your circumstances. But for me, yeah, I mean, I like Adelaide. I just think Australia's going to wake up to Adelaide one day, and, you know, it's value for money. The nature of its economy, the fact that it's the Silicon Valley of Australia, and not many people realise that, but it's just so much. You know, Elon Musk has set up his Australian headquarters there, for example. The Australian Space Agency, you know, space exploration very much in the news this week. Well, Australia's Space Agency is headquartered there. There's so much happening in that regard. There's the $90 billion worth of naval contracts to build submarines and frigates for the Navy, and a whole lot more happening there. So I'd go for Adelaide, and if I could, I'd be buying in that Marion precinct.
Okay, fantastic. Thank you very much. I think it's probably time to get your report on Adelaide.
I think you're absolutely right. Yeah, I think you could do a lot worse, Glenn. Thanks for coming live and asking your questions. Okay, so going back to some of the questions we have, Sarah's asking what I think of Townsville's prospects. I did speak at some length about Townsville earlier, Sarah. I think it's a city with a strong future. It's a growth city. It's got a very diversified economy. It's been through some tough times, but it's ready to fight back. And infrastructure spending, there's a lot on the books. There's a lot coming up. Some of them are already underway, and that's what's going to transform the Townsville economy and property market. We have a question there from Ian about looking overseas. Just not something I spend any time thinking about or researching, Ian. I'm afraid I'm kept very busy trying to keep up to date with this very large nation of Australia. Okay, Trevor saying I love Adelaide. Quite agree, Trevor. Me too. Recommendations in Melbourne for under 750,000. That's from Sunil. Sunil, we're actually this week publishing our new top 5 Melbourne hotspots report. It's worth getting because there are 5 locations in there that all have possibilities. Just looking at, and many of them have good possibilities under 750,000. I'll just give you an example of one. In sort of the middle ring northern suburbs of Melbourne, both the local government areas of Moreland and Darebin feature in our upcoming version of that report. Good level of affordability, good infrastructure, proximity to major jobs nodes like the medical university precinct around sort of North Melbourne, Parkville, Carlton. So those suburbs are proximate to that very, very important cluster of infrastructure in Melbourne. There's some really good prospects, and the areas that we feature in the top 5 Melbourne report that's been published this week are mostly areas where vacancies have still managed to stay low despite we've seen an increase in vacancies during this period. The Melbourne CBD is blown out a lot, but the areas that we feature in this report, vacancies have stayed at acceptable levels, and we're going to see strong rental demand in those areas as we start to come back. The Mornington Peninsula has also stood out, and our recent research doesn't often feature, but there's been many suburbs down there still managed to have good demand despite the period we're going through. And it's one of those places that's going to benefit from that factor that we've talked about throughout this broadcast, that is more people working from home, more people working remotely, and therefore no longer needing to be close to the centre of the city and looking for perhaps moving further out to lifestyle locations. The Mornington Peninsula is a great example of a place that will do well from that, and it also features in the upcoming edition of Top 5 Melbourne Hotspots, which we're publishing in the next day or so. Dean is asking, will Mackay ever recover, in your opinion? Well, I think it already was recovering. I'm not actually, I think it's doing quite well in this pandemic period. One of the trends we've seen just in the last month or so is that there's been an increase in rental demand in regional centres in central Queensland, and rents have risen. Mackay is one of those places, Rockhampton's another, the Whitsundays and Gladstone are also seeing that. And it's primarily caused by the resources sector in central Queensland, which is doing pretty well at the moment. It's probably going to continue to do well as we emerge from the pandemic period. As I said earlier, I think we're going to have some kind of resources boom coming out of this, and we're already seeing the resources sector, for better or worse, because it's primarily about coal, unfortunately, but nevertheless, in economic terms, it's very strong and it's creating rental demand in places like Mackay. Mackay did go for a period of oversupply and downturn. Vacancies were like 6% at one point, but more recently they've been more like 1.5%. And so the Mackay market is poised for recovery, and it's certainly a place that we're watching. You're saying, Dean, it's never really recovered. I think it has. It has. The vacancies have come down a lot. The rents have risen. We're seeing evidence of that right now. And we were seeing some price growth this pandemic period. It's put a bit of a break on that for a lot of locations. But I think going forward, Mackay's got reasons. It's got, once tourism gets back on track, it's obviously impacted by that at the moment, but it's also got agriculture, it's also got its links to the resources sector, and it's also got the Qantas Academy, which it was awarded. I'm not sure about the status of that in the current circumstances, but hopefully, and things get back on track, that will be a going concern as well. Okay. We've just clicked over the hour. We've still got plenty of questions. And you're saying, do you think once the stimulus ends, it'll have an impact on prices? Look, I don't think it's going to be the way media loves to talk in extremes, and particularly negative ones, and they're saying that everything's going to fall off a cliff in September when the stimulus runs out. It's just not going to happen like that, Andy. It's just not going to. People aren't considering that between now and September, there's going to be a gradual but steady reopening of the economy. We're seeing it already. It's happening quite quickly, where the restrictions are being eased. Businesses are going back into operation, particularly in the hospitality sector, and jobs are being created. People are going back to work. So between now and September, that's going to continually be happening. So by the time we get to that point where the current period of some of the stimulus measures like JobKeeper are expected to end, we're going to be in a much different situation that we're in right now. The economy is going to be better, more active, and there's going to be more people back to work. I also believe the federal government will be mindful of the potential for that, the end of stimulus to have a dramatic impact. And it's not going to just suddenly cut it off. They've already indicated that. And I don't think they'd be as foolish as to suddenly just bring everything to an end and damn the consequences. That would mean that all the work that's been poured into stimulus up to this point would be somewhat wasted. So I think it's going to be handled a lot more intelligently than that, and that we're not going to have any cliff to fall off come September. Andy also asking, what about Western Sydney? I've touched on it a couple of times already tonight, Andy, in answer to previous questions, that I think that Western Sydney is the place to be looking going forward as a property investor, because of the weight of infrastructure spending that's being focused out there, the second airport being the catalyst for a lot of it, but not the only thing that's happening out there. All right. Look, I think I've answered a lot of the questions that have come through. It's possible that I've missed a few. I don't think there's anybody with their hands raised at the moment. And we've now been going for over 1 hour, about 1 hour and 10 minutes, I think. And it might be getting close to the point where a good time to wrap up. Let me just check. Okay, look, I think I've covered most of the questions that people have typed in. We don't have anybody currently with their hands up. So I think it might be time to wrap it up and to go and read a book. So thank you everyone for your questions and your participation and your interest. It's been a lot of good and varied questions as always. Many questions about locations across Australia, many of them touching on some of my favourite and cherished topics at the moment. Thanks for those people who put their hands up and came on live. Thank you for Katie in the background making it all happen and run smoothly as always. So I think we'll, on that note, call a halt. We'll do it again soon because there's always plenty of interest and plenty of participants seeking to ask their questions about real estate issues and location. So we'll do another one sometime in the next month. Okay, so time to wrap up. Terry Ryder from Hotspotting signing off. Thanks, Katie. And thanks, everyone. Bye for now.